Hey guys, welcome to this week's podcast episode for the Financial Freedom Podcast. I'm your host, Dr. Christopher Liu. And as you know, I'm always curious, interested about people doing things on the cutting edge, new industries, new fields, and bringing those insights and sharing them with you guys on the podcast. So today I have Kevin Jefferson. He's based out of Texas, and we're going to talk about currency. So whether, understanding central banking, fiat currency, inflation, a little bit about which currency pairs, where currencies go eventually, gold, and also a little bit about Forex. Kevin, welcome.
Thank you. Glad to be here, Dr. Liu. Thanks for having me.
Yeah, I know you have a significant experience in the military, and you actually show business owners, using Forex to create possible passive recurring cash flow. Sometimes you can trade it. So tell people your story, how you got started, and we'll get into it.
Yeah, well, thank you. Thanks for allowing me to. So yeah, I'm Kevin Jefferson from Dallas, Texas. Been in finance over 21 years. I think this year will be actually 22 years in the industry as a whole. Actually graduated from college, nicest military academy at West Point. I was an Army officer, played around in the dirt, got deployed, played in the sandbox, and made it back safely. And so shortly after I got out of the military, I was actually working for Georgia Pacific, but my heart was really in finance. And so first chance I got, I was, able to apply to become a financial advisor with Merrill Lynch. And actually, I was going through the process 2 months after September 11, 2001. So, I mean, really a crazy time to be wanting to be a financial advisor. But I always tell people that was probably, for me, when you're clear about what it is that you want, there's never, ever a bad time to go for it. Right. And so I kind of found myself in that situation, and I was really grateful. And but as a result of that, it really kind of changed the way that I saw providing financial advice, And so I was working with Merrill Lynch, and they had these big production goals that they didn't release us from those goals just because of what we were going through. And so I found an affinity for business owners and entrepreneurs because I would call them and you're cold calling, you're dialing for dollars, and I'm calling airline pilots, I'm calling all kinds of people. And so, but business owners, one of the things that Merrill had that was really neat was their business financial services sector. Their vertical was really good, and so I would just call business owners and ask them, how much, would it be worth it for you to take a look at me, maybe getting you a better rate on your line of credit, because business owners understand cash flow. The less you pay for money, the more money you make, just straight to the bottom line, right? And so I just really got creative about how to try to add value to what people were doing. And then eventually you get into the investment stuff. And so I went independent, started my own firm in 2005. And a few years after that, I found currency trading just kind of on a whim. So CNBC had this program. I don't know if they still do it now, but it was called the Portfolio Challenge. And so every year they give you like $1 million of notional money, and you get to invest it. And so in 2008, they had added Forex to that as an asset class. And so, I didn't know anything about the currency markets. Even as a financial advisor, I didn't know about currency trading because like you had to be ultra high net worth, Citigroup and all that kind of, like you had to be super rich to be able to even get into that, to that vein. And so, but I do remember back in 2008, the euro was twice as valuable as the dollar, right? So like I was like, 2-to-1, so I'm buying euro. And I didn't know anything about scale, leverage or anything like that. And so I took a portion of the portfolio. Maybe let's say we bought like, a couple $100,000 worth. And next thing I know, a week later, it had grown to like over 700,000-800,000. So I was like, okay, wow, this is pretty interesting. And it kind of got me intrigued about it, not knowing anything about how dangerous it was or whatever, but it definitely caught my attention, right? And so they did their job. And so I started exploring. I went down that rabbit hole. And one thing as an advisor that I always wanted to do, and one of the things I always felt was important, and one of the things I maybe would have gotten more enrichment from as an advisor if this was more common, was really the ability to have a true skill set or a trade. Business financial advisors, you get philosophies, you get information, and you get the ability to coax and, you talk to people, which is kind of your superpower, right? The ability to sell products and ideas. But I didn't feel like financial advisors really actually had a technical skill. And I remember back in 2003, 2004, when I was with one of my clients. He was a retired tailor, and he had owned a tailoring company. And so he had sold it to one of his apprentices, and he was telling me when we were actually writing up, he bought bonds, and so we were writing up the paperwork for a bond or whatever. And he said, I don't ever remember anybody who has a trade that wants to work that can never work. And so I always remembered that, even as a financial advisor. And so when I stumbled upon Forex, I really treated it like that. Like that would be my trade. That would be the thing that I would explore. I looked at stock trading, but I really was intrigued by Forex because of all the stuff that came along with it, the leverage and the ability to make a lot more with a little bit of money. Trading currency. So kind of stumbled my way into it, and now I've been trading for actually this year is 15 years. May of this year was 15 years trading, and I've left my practice. Everything was able to replace that, with currency trading, and so now I have more time freedom and more resources to do more stuff. So it's been good to me, and I'm grateful that I learned that skill set. But I learned a lot about myself in that journey, and I learned a lot about how it's every market is really the same. It's just the asset that you're trading, and once you understand that, it's a lot of opportunities there. So just a little bit about me.
Yeah.
Father of two sons, beautiful wife, Jennifer, and two boys, Christian and Asher, in Montessori here in Dallas, and just great kids, loving the life. We just recently, my company hosted we were sponsored a golf tournament last weekend, and so they always come out and support us through business. And I teach them business at an early age of 9 and 10, so that they can understand that if you want it, you got to go get it. And
Yeah.
so eventually it can be passive, but you got to go work for it a little bit too. So here we are.
Yeah. Yeah. I love that. I really love this idea of developing a skill set and really understanding money, because once you understand money, you can apply it to anything. So,
Absolutely.
and that's something we don't learn in schools. One thing is talking about, because most people, they turn on Bloomberg or CNBC or whatever, and they see equities, but they don't really understand there's actually bigger markets. There's the currency market, which is bigger than the bond market. Bond market is bigger than the stock market. Tell people, where currencies lie. Why is it an interesting asset class? In all of the advantages of looking into currencies.
Sure. Thanks for that question. So yeah, you're absolutely right. So currency trading is a more than $6 trillion a day, market. So it dwarfs the other markets. It dwarfs the equities market. But it's really about the narrative that gets put forth, right? And so there's entertainment and value in things that people can touch on a daily basis. And so even though people touch money on a daily basis, they don't see it as having any other value than the intrinsic value of being able to spend it or to get it, right? And so people really have kind of created a mindset around what money is to them or what currency is to them. And so we'll get back to that, and I'll put a pin into why I love Forex and all that stuff in a second. But so when you look at equities and stock markets, so people are experiencing different things. And so right now I'm at the Westin Hotel. So people, when you go travel and you see the Westin and you see a ticker symbol for hotels, you relate it to something. When you see Colgate Palmolive or Coca-Cola, you actually drink Coke and you experience that. And so it creates kind of a little bit of a nostalgia and a sense of familiarity that leads people to believe that they can go and participate in those markets easier and maybe more successfully than they will or maybe should. And so I think because of the ubiquitous nature of all of the things that create the equity markets as we know it, Amazon and FedEx and all those companies, it really becomes this thing that where you can kind of get that casino feeling because you have a familiarity with it, right? And so and it draws a lot of people in, and I know plenty of people who make a lot of money on it. Caveat that the options market, in my opinion, is actually probably more lucrative with the fraction of the capital, right? And so you can take derivatives of the same things and actually own them. Not to get into a class on options, but where you can take that and you can actually make more money, not even having to be involved directly in the stock market, as it were. And so I think it's just a familiarity thing. I'm a personal Bloomberg fan. I'm not as much on the entertainment stuff, so I like Bloomberg more than CNBC personally. But I think it's just a familiarity piece, and so people, they can relate to it. And so, it's understandable and fair, right? I mean, we all want to always participate in something that we feel that we understand. And so, that's why Mickey Mouse is still a beautiful big rat that, this big mouse that people want to run up and hug, because the narrative has been created that Mickey Mouse is cool as long as he's 6 feet tall. He's not cool when he's like 2 inches short, so it really is all about perspective. And so the thing I like about the currency market, specifically Forex, and so let me explain a little bit about what it is, right? And so because I think people don't even understand what Forex means, which stands for the foreign currency exchange. And so I always try to use the analogy of, when you're taking a trip, right? Let's say if we're going from here and we're going to Cancun or going somewhere in Mexico, and before you leave the airport, before you leave the United States, in most cases, you're going to exchange some of your US dollars for the peso. And you'll even see it in the airports where it says foreign currency exchange. And so what you're doing is you're actually trading your dollars for pesos now, because the law of supply and demand says that the peso will be more valuable in Mexico than it is in the United States. And so you've made part of a currency trade already when you go on vacation and travel abroad. And so then obviously when you come back home, which is called in trading, is called a round turn. So basically when you've taken a round trip on your journey, once you come back, you normally exchange your pesos back for dollars. And so whatever the prevailing rate is on that day is what you get, in dollars back from the pesos. And it could be more or less. Generally, it would be about the same because currencies don't fluctuate that much. But you've basically made a currency trade every time you've exchanged your money for another country's currency, fiat currency, and then bought it back. So if people could relate it to that, I think they would get it and understand it's not as tricky and as scary as it has to be. Now, I did say something in there when I said that, when you come back, it may be worth more or less, but it probably wouldn't be significantly more or significantly less, because obviously a currency can't fluctuate significantly on a day-to-day basis. Like currency can't fluctuate like gas prices do, because if currency fluctuated 3, 5, 7, 10% a day, people would be scared out of their brains and they would do nothing, So, I mean, if you think that people are scared when they hear in Texas, when people hear about snow, all the milk and the bread is gone, right? So imagine if you thought that the dollar was going to be worth 90 cents tomorrow. You don't know what, you wouldn't be able to live. And so with that being said, although there's small fluctuations, the way that the currency market exploits those is through the power of leverage. And so obviously where you have one thing that can do the power of many. And so through leverage, we're actually trading, infinitesimally small amounts of a penny, like, 1/1000th of a penny. And then they just ratchet that value up to where you can actually make more money. And so in comparison, the stock market, literally, we all know that you would have to have, a dollar would have to go up by 100% to become $2, right? And so in the currency markets, a dollar could have the intrinsic value or the leverage or buying power of $100. And so if you had the buying power of $100, all it would have to do is go up but by 1% to create $1. And so the amount of ease through leverage allows you to actually create similar returns to the stock market with a fraction of the capital that you have to put forth. Now, on the flip side, you have to be mindful of the risk management, as in every industry, because whatever can work heavily for you can work heavily against you. So you don't take these outrageous bets just to make more money. But if you do it consistently and slowly, you can actually eke out a pretty significant, income for yourself. So that's really kind of a broad, big picture, kind of hopeful explanation of what the currency markets are and how they compare to the equity markets.
Yeah, it's interesting because there was this London English trader, thinking that he basically broke the bank, doing these leverage Forex trades. So it's very risky. So my question is, so there's stock investors, there's stock traders, there's options traders, bond traders. One thing is in this is sort of a way to generate cash flows based on these trades. And of course, this is for professionals. If you're an amateur, don't do this because you'll probably lose a lot of money. But so it sounds like you can use this as a portion of your portfolio, component of your portfolio to actually amplify your gains. So, traditionally it's like real estate, stocks, some bonds maybe. And, but it's sort of like how people participate in hedge funds or, venture capital. Forex could be a way to magnify your gains. Is that correct?
Absolutely. And so speaking to what I do, as it relates to, how we serve people. So coincidentally, just a little bit about the company that I run. So the company that's known as FM Trade, we launched as a DIY educational service. So we're actually teaching traders how to trade the currency markets or use the currency markets for cash flow. And specifically, I had a course called Forex for Dads because I wanted dads to be able to access the currency markets for income without having to get a second job, so they can operate in what I call the fullness of their humanity. Obviously, the more time freedom you have without having to worry about resources, the better you can become, because you have more time for yourself, you have more time for your spouse, your lover, and you have more time for your kids and your community, right? And so I was trying to really create a way to give more time, liberty these people who ultimately ended up being business owners and entrepreneurs. So I kind of still attracted the same crowd. And so I also used to have right before COVID, we only did one since COVID kind of let up, but we had this thing called Train the Trader Live. And so we would have a 2-day boot camp here in Dallas, and people would fly in or come in, and they would literally sit down for 2 days, and we would give like an intensive training. And by the time the boot camp was over, they would be able to literally take their first trades and be successful. And so in one of those classes, which is kind of leading me to where we are now, I had a couple of doctors who were in that class. And I remember one of them on a lunch break, he shared with me, that he loved the information that I was giving with them, getting with them on and giving to them. He's like, it makes perfect sense. But he said, we rescheduled this boot camp 3 times on account of me and my partner's schedule. And so he's like, we coming off an 18-hour work shift, coming in here trying to learn Forex. I don't know if I have time. So how much would it be just for you to do it for me, right? And so we launched the DFY platform a couple years ago. In our first year, we returned 21.48%, 21.5% in the middle of COVID. That was like 2020, 2021, something like that. And then we've only gone up from there. And so we leveraged it to just use the DFY model to where now they have access to our course so they can learn how to trade anytime they want to, but we just took away from them the need to have to do it on their own, and now we do it for them. And so we've kind of even taken that further because and then we have the vertical where obviously people are putting their money up and into their accounts, and we're trade copying for them and kind of helping them win. But then now we've launched a solution to where our clients don't even have to put their own money up, because we help them work with prop trading firms and use the prop trading firm money now to create cash flow. And so now our members are leveraging hundreds of thousands of dollars of other people's capital that they're ready to partner with them on. And now we're actually creating asymmetrically high cash flow on a relatively small amount of money or outlay. So really getting creative about how to get passive recurring cash flow through as many leverage systems as possible. So they're leveraging my expertise as a trader. And they're leveraging the prop firm's money, and they're making it basically an asymmetrical bet. So our membership fee that they pay to become a member for a year, that's their skin in the game, and then they're taking an asymmetrical bet that money will 2, 3, or 4x in 15 months or so. And so it's just a really neat way to show people how you can do this and be creative. And my biggest thing was doing it without adding employees, overhead, or more of what I call the BS associated with being in business, right? Because there are a lot of business owners out there who have businesses that they maybe love what they do, and they might love the money that they make, but they really hate most of what else that comes along with it. And so my goal was to really get these business owners and entrepreneurs in position to actually build real passive cash flow that rivals all or a portion of their business, so that they could actually get that without having to go create more problems for themselves. So as creative as you want to be, I think Forex and opportunities like this stuff allow you to be that.
Interesting. You brought up a lot of interesting things. You especially when you're talking about utility of currency, where you're exchanging it, but you can also, and you talked about volatility. It reminds me of the ruble when Russia invaded Ukraine. Just these massive price spikes. And how can people contact you, follow you, reach out to you, follow you on social media, etc.?
Sure. Thank you. So our website is FM Trades, FM like the radio station, trades with an S.com. And you can go there and go to all our social media links. But on Instagram, my handle is at Help Made Millionaire. Like I'm helping you out. Help Made Millionaire on Instagram. And then on LinkedIn, I'm just Kevin Jefferson. And in Facebook, everywhere else, I'm just myself. So you can go to fmtrades.com and you can learn more about what we do. Our YouTube channel connects from there. And, I put a lot of videos out just giving my assessment on the market in general, not just the currency market, but really I told people at the beginning of the year that I expected the indices to go up. I called oil dropping last year and into this year. And I called the drop of Bitcoin off of 70,000, got it on video. I called the short of Tesla last year, I think it was April. And then I called the reversal off of 125 on the upside. I did that to my little West Point circle. I shared that with them in private, but I just, I enjoy it. And I really just want people to see that this is something that's viable. And I have a lot of clients who are real estate investors, right? And so it's not an either or, in my opinion. It's really about maximizing all the tools that you have available. And so one of the big things that we found with them is, we're in an environment where sometimes you have to sit on your hands a little bit in the real estate industry. Interest rates, the cost of properties and acquisition and renovation is different now. I had a number of clients who called me and basically griped to me because they couldn't gripe to the GP of their deal that they're facing a capital call on their multifamily investments, right? And so in this forum, it's like, okay, now if I could take a portion of your resources and put it in position to create an asymmetrically higher return, and do it in a conservative, in what I call a risk responsible way, then now you can actually still be generating maybe 3 to 4% passive cash flow on your money per month, and just hold on to that until the time comes. And now actually you maybe de-risk yourself because you have more resources in a year when the markets are better, or you have more resources that are being generated even as you're deploying those resources. And so it's kind of becomes your personal kind of your wellspring of ways to not only buffer, the risk that you're taking, but also to continue to replenish yourself as you make better decisions. So the thing is, if you're not rushing to a friend of mine in the military always shared with me, he was a colonel, infantry colonel. He said he always told his soldiers, don't rush to failure, right? And so in real estate, when you feel like you're going to miss out or on a deal, or you feel like you got to participate, all of a sudden that FOMO becomes the foul up, right? And so you don't have to do that. You can actually still have your cash, earning cash, and then deploy those assets differently at a different time. So I'm all for collaboration. I'm not the answer to everything, but I'm a great supplement to most things. So fmtrades.com is where you can find us.
Excellent. And let's thank for this wonderful, interesting podcast. And all the resources will be in links and show notes. Again, none of this is financial advice; it's educational purposes only. And with that, thanks so much for coming on to the podcast.
Thank you. Thank you for having me, Dr. Lou. Appreciate you.